All right, hello there. I am Matt. This is the first stock speedrun for the weekend of May 28th, 2022. I did skip last weekend. There was a problem with not to get too into it, but there was a problem with the fire alarms in my apartment building, and that made recording kind of impossible. But now we're back to our regularly scheduled stock speedruns. If you are unfamiliar with what a stock speedrun is, of course, you can check this video description for an explanation and a disclaimer as to its content. Let's see what we got here after 2 weeks. William Penn, Bancorp. William Penn, I know who that is. Isn't that a musician? William Penn? I don't think he's a banker. I don't think so. At least not the one I'm thinking of. Okay, let's see. What do I want to look at first? I want to look at... Geez, you don't do this for 2 weeks and you start to get rusty. Okay, seldomly traded. I've mentioned in the past that I kinda don't like that, and my opinion has not changed. Because, see, it goes entire days without trading. So at any one given time, how could you really get a good idea of what the value is? That's my problem when things are seldomly traded like this. Oh, wow. Took a... Oh, wait, that was 20... No, that was 21. That wasn't COVID. This was COVID. What was this? What happened to it in February of last year? Excuse me, February of last year. And it's been floundering ever since between like 11-ish and 12, or maybe like 11.5 and 12.5, give or take. What happened to this? Now, Yahoo's not going to tell me. Yahoo's not going to tell me because Yahoo articles only go back. They only go back a year, and it is May of 2022 currently, so the articles are only going to go back to May of 2021. People in the conversation section might be able to tell me, but you know what? Let's find a little bit more about the fundamentals of this company first before I jump into figuring out what the hell happened there. I mean, I don't think it was anything financial related because the financials look fine. The earnings growth looks half decent. I don't really see any hiccups in those. Revenue is up, earnings are kind of meh. But, everything else being even, at least the revenues are up. That's something nice to see. Kind of 2022 starting off on par with 2021, roughly. Let's see, what else? Let me read about this a little bit. Holding company for William Penn Bank provides retail and commercial banking products and retail financial services in the United States. Savings, deposits, checking. It's a bank. Like, people know what a bank is. You should know what a bank is. Provides 1 to 4 family, blah, blah, blah. Where do they operate? Philadelphia counties, Pennsylvania, Burlington, and Camden counties in New Jersey. Okay, so like a northeast regional kind of bank. Let's see what else were in these articles. Who the hell is this guy? Wait, what did that say? SIBA Bank exec. Is that this? No, this is William Penn. That's not SIBA. Shareholders, the number one William Penn Bancorp shares. Yeah, I'll read that. Actually, no. You know what? Before I read these articles, I want to know why this took a giant jump last year. More insider buying today. I will be the judge of that. If I go to holders, I can figure that out. Relentless insider buying here since the end of March. Now that was last year. Agreed, just bought more. And yet, it still hasn't gone anywhere. Hold on. I want to go back to summary here. I want to see the big chart. Can I open this one in a new tab? Yes. I want to see the big chart because I don't want to see 1 year. I don't want to see 5 years. I want to see 2 years. So it dropped all the way down to about 11.5. And yeah, it's more or less, I mean, it's gone a little bit, but compared to how it was operating prior, you can say it's practically gone nowhere. Whatever it suffered from on exactly, well, maybe not exactly, but the week at least of March 22nd of last year, it apparently is still suffering from. Pays dividends too. That's always nice, even though it's not that great of a dividend. What did I want to see here? I wanted to see... What was I clicking through? I was looking through articles. No, that's right. I was looking at the conversations. Maybe good to get in while bottomed out. I've never seen a PE this high. Pays 3+% dividend. 3+%? Maybe it used to, because right here it says 1%. I don't know where you get 3% from. Maybe that was last year. Why would they have done $10? Oh, they had an offering? Is that why? And if the offering was at 10, that would make sense why it dropped all the way down to roughly 10. Because if the company is offering you shares at 10, they're basically telling you, not only do we need more money, but that we think we're valued at, we think that $10 a share is a fair value for our company. But the question is, if they're trading in the 30s, why would they offer it at 10? That doesn't make any sense. Why wouldn't you? I mean, even GameStop knew enough to take advantage of their overblown share price to offer more shares at an elevated price where, in most people's opinions, including mine, is way above fair market value. But then again, you can also argue that fair market value is whatever the market is offering. Let's not go down that tangent. Okay, let's see here. Puffery. Outlook on cover page says bullish, but forecasts are neutral. Price is steady for the past 7 months. Profit margin. I kind of wonder why, if it truly was an offering, I wonder why it has not recovered since then. Because that's really more of a short-term reaction, nothing really impacting the company necessarily. Unless they offered it like a shit ton of shares. Maybe they offered like 90% of the current shares outstanding. I mean, I doubt that, but it's, you know, it's not impossible. Let's see, what other articles can I see here? If you like EPS growth, then check out William Penn before it's too late. And that's a stock repurchase program. Wait, so they offered stock last year. At least I think they did. That's what I got from that comment, but I'm not entirely sure. Might deserve your attention today. Bank moving into new markets. First quarter results. Investors own most of invested 5 years ago are up 70%. Wait, 5 years ago are up 78%? You sure about that? I don't know what 5 years ago you're measuring from, bud, but I see it at 24 5 years ago. I don't know what you've been smoking. It's a stock repurchase program. Was it really an offering that made this drop? Because they offered shares and now they're buying back shares? What the hell is going on with the financials of this company? Back on March 25th. So it's happened already. I guess they're just purchasing it at market value. Open market purchases. Yeah. Okay, so let me get this straight. You offered, and maybe I'm completely wrong because I misunderstood that comment and it's not actually an offering that made this go down. But if it is, let me get this situation straight. You offered shares last year at significantly lower than current market price. And then a year later, you buy back shares at that lower market price, which you purposefully, well, arguably purposefully, downgraded yourselves from last year. If this is true, if I'm correct about this, whoever is running this company, who's ever operating this shit, is a moron. And I feel like this company is doing well. Those revenues or earnings look good, despite, not because of, but despite the leadership of this company. But then there were all those comments about insider buying. Well, I guess the insiders can't be that stupid because they know enough to buy. And also, what the hell were they talking about with the PE that you'll never see that low again? Because I see a PE of 42 here. Right? That's actually very high. So what the hell is going on here? Okay, I need to figure out what happened here. This is like a crime scene, and I need to collect the clues to figure out what kind of massacre occurred. William Penn Bank. March 2021. Latest press releases. Other events. On March 24th. There's a SEC report. Parent company issued a press release announcing the completion of the bank's second step conversion from the mutual holding company form of organization to the stock holding company form of organization. What? Company sold shares of common stock at $10 per share for gross offering proceeds. So it was an offering. Company sold this many shares proceeds in a related subscription offering. Gross proceeds of 126. How much are they buying back for? Buying back for 5% of outstanding, or 7,508. So, oh, nowhere near the amount they sold last year. Never mind. Copy of the press release is attached. Conversion from the mutual holding company form of organization to the stock holding company form of organization. What is the difference? Mutual holding company results from the conversion of a mutual institution such as an MSB, mutual savings and loan institution, or mutual insurance company into a parent company or subsidiary stock company. What the fuck? Very good topics for the learn along I got coming up, because this is a little out of my depth, I'm not gonna lie. My bank wants to reorganize from a mutual savings bank to a mutual holding company. Chartered financial intermediary that operates as an association of individuals who are depositors, also known as members. As a member owned, you may have governance rights. I mean, whatever it was, it required them to offer shares. And they offered now if you have gross proceeds of $126.4 million. And that was at $10 per share. This many shares. How many shares are outstanding right now? Where's the statistics? Shares outstanding 15.3. There used to be, and they offered 12.6 last year, so there used to be less than 3 million shares. So if you suddenly flood the market with over 4 times, almost over 4 times as many shares at a much lower price, yeah, you're gonna definitely dilute the crap out the shit out of crap. So that makes sense as to why it dropped and why it hasn't really recovered. But it still looks like a half-decent company. But you know what? I'll bet that this was roughly the market cap prior. Is there some way I could see a chart of market cap over time? I don't know how to see that. Market cap 2022 to 2020 to 2022. Oh, it did drop. Okay, no, I'm surprised by that. That's interesting. Because what I expected to see. Okay, you know, let me draw this out. So here's what I expected. Or rather, here's what I was thinking, because... Oh, shit. Here's what I was thinking. So... Here. I'm going to draw several charts, okay? This chart up here is number of shares over time, right? So you have this, and then suddenly offering, and it goes up to here. Right? But it looks like the fundamentals of the company didn't really change all that much. So, and this is the share price, right? The share price, I think it did like some stuff here, then like that's the share price, right? But then there's the market cap. If you combine these two charts to get the market cap chart, you have lower number of shares but higher share price equals this. You have higher number of shares but lower share price equals this. So these two charts together make this market cap chart that is fairly level over time, and that makes sense. Maybe it dropped off a little bit. That chart we looked at before, it had like, you know, like $500 million here, and then it dropped a little bit. Maybe like by a fifth. Because it went from that to 0.17. Actually, even that doesn't make sense. No, I don't think that chart is right. I don't think that chart is right. I think something about that chart isn't taking into account the offering correctly. Because I think over time it looked like this. It looked like this one. So yeah, if you own shares at this time, rather at this time, yeah, you got fucked over. Because your shares are now worth less, but the overall market cap of the company is still roughly the same amount. Again, I think this is what the chart actually looks like. Maybe I'm wrong, but this is the way that it makes sense to me. But yeah, if you had held at this pre-existing shares this time, yeah, you got screwed over because your shares are now worth both less money and also a less percentage of the company. But the overall company right now, market cap hasn't changed. The same amount of money, whether you were to buy here or here, is still going to give you the same percentage of the company, if that makes sense. And I'm guessing the reason why it hasn't really moved much after it came down to this level is because, you know, it's kind of an average bank. It's not a terrible bank, but it's average. You know, we looked at those quarterly reports, those quarterly bars, and there wasn't really a whole lot of increase over time. It was holding steady, but there wasn't really any increase. And usually, increase is what you would like to see, especially with a bank. So why am I drawing this? I'm drawing this because I want to try to explain that what happened here, isn't actually that devastating of a move now that we are sitting here. And because of that, I kind of want to give this a hold. Not a buy because the earnings growth does trouble me a little bit, but it doesn't look like it's going to go down, but there could be some kind of increase in spike eventually. So I think I feel comfortable giving this a hold. Yeah. And this, what happened here, isn't really much of consequence. This could have not happened at all, and this chart could... Okay, I'm starting to make this thing a little messy. I'm going to start over. That could have not happened at all, and the chart could have, you know, looked like this normally over time without this big drop here, and I think I would have still drawn the same opinion, honestly. What happened here was inconsequential. I mean, it'll be consequential if I was looking at this, you know, like here, but I'm not. I'm looking at it here. So, I mean, well, they could pull that shit again. No, I don't think they would, because that was a special one-time thing because they were literally converting how the company is organized. And I guess that required offering more shares? But you know, it doesn't really matter what I say right now because I already hit that hold button. I'm locked in. Is that your final answer? Yes, it is, Regis. Thank you. Okay. I think that's all I gotta say. And that's all I gotta draw. So, I'll catch you in the next one.